Hello, and thanks for watching Proactive New York. I'm joined by Gary O'Connor. He's the CEO at Moneta Gold. Gary, very good to meet you.
Excellent, and thank you for the opportunity to be able to present today. It's a pleasure to be on.
You're welcome, Gary. So for viewers not familiar with the company, can you tell us about Moneta Gold?
Okay, so Moneta Gold is a gold exploration and development company. It's based in Toronto, trades on the main board of the TSX and on the OTCQX. And we're developing a major gold project in the Timmins camp of Ontario, Canada. This is one of the larger gold development projects in North America, and we're pleased to be able to be listed in the US on the OTCQX and have access to, our loyal investors in the area.
In fact, you're out with a positive preliminary economic assessment for your Tower Gold project yesterday, and you said in the assessment that it demonstrates robust economics. Tell us more about the project and the stage of development it's at.
Yes, so yesterday we published our preliminary economic assessment. It's a scoping study. What it does, it evaluates the key economics of the project. It showed excellent, robust economics. It has an NPV at a 5% discount rate using 1,600 US per ounce gold price of about 1.1 billion Canadian dollars, has a IRR of 31.7 and a payback of 2.6 years. This is all after tax, so this is after taxes have been paid. It has a total cash cost life of mine of US $910 per ounce and a all-in sustaining cost of $1,073 per ounce. And remember, this is all at $1,600 gold, which is significantly below where we are today. So the project shows excellent, robust economics all the way down to $1,300 gold, and of course it is well leveraged to the gold price at above 2,000 ounces of gold. That we have significantly higher NPV, IRR, and significantly quicker payback time. So yeah, very robust. We've kept the initial capital low. It's kind of a stage development. We start with just open pit operations in what we call the Garrison area. We have good high grades there, low strip ratio outcropping. While we're developing and mining those and getting good cash flow, we're developing the underground. We ramp up there. We bring in more high grades. We keep the grades high for the first 11 years. The grade's about 1.3 grams per ton. We're producing 261,000 ounces a year at that $910 cash cost. So good margins there. Life of mine, we're over 100 million after tax free cash flow for nearly about 1.9 billion after tax life of mine free cash flow. So significant economics here, good return for our investors. We're currently trading at about $11 an ounce. The project itself, this one essentially a 1.1 billion NPV, we're trading at only about 20% of that. The norm is to be in that 40 to 50%. So we see the ability to have warranted tripling in our share price if fully valued at where we are with the development.
Gary, you mentioned low initial capex for the project, but your balance sheet looks pretty strong at the moment because you closed an upsized and oversubscribed bought deal financing back in August. You raised over $15 million. So looking quite strong at this stage.
Yes, correct. We did an oversubscribed bought deal financing just last month. It was done as a charity flow through. So it was done at a, over 40% premium to the market. A number of new funds came in, a number of large US based institutional investors came in, including Franklin Templeton, Libre, and some of our current shareholders here, also added to their positions. So we have a very strong institutional backing. About 40% of our shares are held with large, precious metal funds based here in North America. They've continued to support us. The raise was done primarily for the infill drilling. So we're doing infill drilling to upgrade our resources as part of the pre-feasibility study. We've already kicked that off. We've done over 60,000 meters already. We'll be completing 70,000 here very soon. And then we're looking to, now that we have the PEA in hand, we're looking to expand that drill program. And this is all PFS drilling. So we're also kicked off our other PFS studies, including the geotechnical work, hydrological work, more metallurgical test work. The environmental impact baseline study is well underway. We're over 2 years into that, and we'll have the baseline data completed by the end of this year. Continued our community engagement work, and we're looking to, fast track into pre-feasibility and keep the project, the momentum of the development moving forward.
Gary, you mentioned the OTCQX. In fact, you started trading over a year ago on that market. What was the reason for going to the OTCQX, and what sort of reception have you had from US investors?
It's been excellent. We always had a good following in the US, notably with the retail investors. The OTCQX has enabled our US investors to trade, to be able to access to the market without having to go through the TSX. So it's we're trading in US dollars there. And as mentioned, we've added significantly to our institutional investor base with the last couple of rounds. So, I think I mentioned, Franklin Templeton came in, Gabelli came in, Libre added to their position. So we've got some good, US investors in there now, institutions, and we're looking to continue to grow that. And by having the OTCQX, it enables those investors to have, ready access. And it really has helped our liquidity and given more retail investors access to the stock.
Well, Gary, I hope you'll keep us posted on developments at the Tower Gold project, but thank you very much for the introduction today.
No, thank you. And yeah, we look forward to continuing to move it forward and delivering on that value. As mentioned, we've gone from really being a $30 million market cap 3 years ago to 200 million today, and we'll look to continue to add value to all our stakeholders. So thank you.
Gary O'Connor, CEO at Moneta Gold.